welcome to Tech Latest from Nikkei Asia, where we bring you the freshest updates from the technology sector in Asia. I'm your host, Katey Creel in Tokyo, and this week's episode, we're talking to Wataru Suzuki, Nikkei Asia's correspondent in Shanghai. Welcome to the show, Wataru.
Hi, Katey. What's up?
That's what we're about to find out. So this week, we're going to talk about another extension to the U.S. China tariff truce and what it means for tech in China and globally. So the two sides have been threatening duties on each other up to, I believe, 145% from the U.S., 125 or so from China. But they've twice paused this now, putting in place 90-day truces each time. And the latest day of execution came just a day before the previous extension was set to expire on August 12th. So now I believe we're looking at a November deadline.
Mm-hmm.
Where does this tariff situation between the two countries stand now? And is there any meaningful difference in this latest pause compared to the first one?
Yes. So the U.S. and China agreed to extend the pause on additional tariffs, initially agreed to on May 12th for another 90 days until November 10th. So it's just an extension of an existing agreement. But I think that still shows that the two sides are interested in negotiation. For example, the U.S. has granted export licenses for NVIDIA's H20 chips, and China has approved rare earth exports to the U.S. after introducing the export controls in retaliation to the U.S. tariffs. There's also U.S. President Trump's comments a couple weeks ago about visiting China if they were to come to an agreement on a trade deal. So all of this is a relief compared to early April when things looked like they were getting out of control.
Pausing could just be the new normal.
Yes. So yeah, that being said, the tariffs are still already high. The U.S. has raised its tariffs on Chinese goods by 30% so far this year, while China has raised tariffs on U.S. goods by 10%. There's also some unresolved issues, such as transshipment, which is obscuring the country of origin by shipping via a third country like Vietnam or Mexico. And analysts say that's been happening with the China-U.S. exports. There's also the issue of the two countries' involvement in the Russia-Ukraine war. And the U.S. has added tariffs on India for buying Russian oil.
Right. That was a big moment.
Yeah, China hasn't been subject to the same penalties, even though they also buy Russian oil. So there's some uncertainty around some of these issues.
Uncertainty does seem to be the name of the game since the second Trump administration got started. And I think there's a lot of things we'll just have to wait and see how they unfold. But for now, at least, investors seem to be like they were quite encouraged by the latest extension of the truce. And it was particularly good for certain Chinese companies.
So the Chinese stock market is very strong right now. If you look at the benchmark CSI 300 index, which is an index measuring heavyweight stocks in the Shanghai and Shenzhen exchanges, that just hit a 3-year high.
Oh, wow.
If you look at the Chinext index, which is an index tracking Shenzhen-listed stocks and many in the tech hardware space, that's performed even better. It's gained almost 30% since the initial trade truce in May. And if you look at individual stocks, some of the biggest gains have come from niche high-tech suppliers. For example, these may have been names you never heard of, but one company is called Victory Giant Technology. This company produces printed circuit boards. They're up more than 400% this year.
Wow.
Another company is called Zhongji Innolite. They produce optical transceivers. They're up by more than double.
Jeez.
And a competitor called eOptolink Technology. They're up even more.
That's really interesting. I have two questions. One is, why is the truce giving these companies such a boost when there is, as you said, still so much uncertainty? And why these companies in particular? Why not, say, the shoemakers or the clothing makers?
Yeah, so it seems like the trade truce has lifted the uncertainty in terms of investor sentiment and kind of lit a fire under some investment themes that have been brewing in the Chinese market. One is the AI boom. You might recall around February, there was this DeepSeek moment where,
Yes.
you know, there was a lot of spotlight on the capabilities of Chinese AI models. Now I think there's a spotlight on the Chinese supply chain that is powering, AI servers and data centers. So
Right.
the companies that I mentioned, they're suppliers to NVIDIA. They're suppliers to the big U.S. cloud service providers like Amazon, Google, Meta, and Microsoft. And one investor who I talked to said, his biggest position was in a supplier of printed circuit boards for AI servers because
Interesting.
they are really hard to make at the moment. And so companies like Victory Giant Technology are able to command a high market share in this very fast growing industry.
That makes sense too. That might give them a bit of insulation too from political uncertainty, because even if tariffs go up, if you're the only one making this component, then people just have to kind of pay the cost.
Exactly. And, domestically, there is another investment theme, the so-called anti-involution campaign. This is a policy initiative by the Chinese government to try to curb oversupply and excessive price competition.
Mm.
And there's some hope that commodity producers, for example, or those suffering from a price war, like solar panel makers, they will benefit from government-led production controls.
Oh.
And maybe the last dynamic is more of a supply and demand shift. So there's been a rise in savings in China because of years of property market downturn. So instead of buying homes, people are putting more money into time deposits or just putting them into their bank accounts. And there's expectations that some of that will be funneled into the stock market.
Oh, interesting.
Yeah, and there seems to be government support for that as well. The stock market has been promoted as like an alternative source of wealth. And in April, when the trade war really escalated, a bunch of state-backed investment companies came in and declared that they bought into the stock market and they helped stabilize it. So I think there's some perception that if things were to go downhill again, the government would step in and kind of narrow the losses for investors.
So a lot of factors feeding into the kind of stock market upturn, not just the kind of tech prowess, which is a big part of the gains, I'm sure, but also, as you said, the economic and financial flows. So for now, the high-tech suppliers in particular, they appear pretty well positioned to maybe continue their gains or expand market share. But what are some risks that might be coming later in the year, especially if the latest 90-day truce does expire without a meaningful agreement?
Yeah, as I mentioned a little bit, the domestic economy in China is not in great shape right now. And I see more and more companies trying to go global and become competitive in overseas markets to offset kind of the weakness in the domestic market. So, like a breakdown in this trade truce will be potentially a big risk factor if they don't come to an agreement on a trade deal, or if some of these uncertainties that we talked about kind of start escalating the tensions again.
Right.
We also need to see, whether, given this competitive dynamic among Chinese companies, whether companies like Victory Giant are able to maintain a high market share in this very lucrative AI industry. And, there's also questions about the sustainability of this AI boom.
Indeed.
Whether this enormous amount of spending in infrastructure is going to deliver returns. So I think until we see evidence of that, we can expect maybe more volatility in the stocks involved.
Yeah, I think we've seen recently with a bit of a stock market dip in the US on exactly questions of the AI boom sustainability, that it's coming down to crunch time for companies that are investing in all these data centers and AI servers to start showing some return on investment. So I think probably almost as big an uncertainty as the tariff issue.
Yeah, exactly. And, when this happened and the share price of NVIDIA, for example, dipped, the companies that we talked about, they also dropped. And so, yeah, they're very tied to this volatility in how investors, perceive the AI revolution, I guess. Also, the U.S. tariffs are starting to bite into the profits of certain companies. For example, a footwear company that makes shoes for Nike, for example.
I imagine they're very exposed.
Yes, they reported that earnings have declined compared to last year. And yeah, it didn't really come as a surprise because, for example, Nike said they are planning to reduce their dependency on imports for China. And we don't really have a full picture of how much the U.S. tariffs have impacted corporate earnings in China. But we're in earnings season now, and we might get some more clues in the next couple of weeks.
I certainly hope so, because right now there's a lot of, as you mentioned, uncertainty and also kind of a lack of visibility on where we are in the kind of economic cycle. I think the front loading, for example, of companies trying to beat the tariffs that were being imposed has kind of distorted a lot of earnings, and we'll just have to wait and see going forward how the demand picture shapes up.
Also, the anti-involution campaign, it's still unclear how they will be implemented across different industries. For example, solar panels, the leading companies in this industry in China are private companies, not state-owned companies.
Right.
And analysts are kind of a bit skeptical on how, willing the top players, which have been relentlessly competing for several years, whether they will suddenly fall in line to the government messages and start reining in production. So there's a lot of hope and expectation. I think there still needs to be the execution that needs to happen across different industries.
So for all the all that's happening and all the kind of talk and concerns about tariffs and output and overproduction, I think we're still largely in a wait and see mode and how this all plays out.
Yes, exactly.
Well, thank you so much, Wataru. It's been a really great conversation, and I'm looking forward to your continuing coverage on how China and Chinese industry deals with the vast, vast uncertainty.
Thank you, Katey.
That's all for this week's episode. For more of Nikkei Asia's tech coverage, visit asia.nikkei.com. You can also subscribe to our weekly Tech Asia newsletter, which will be delivered to your inbox every Thursday. Thanks again for listening, and check back with us next week for more updates on the tech trends that matter.